Hello, everyone. This is Justin with the Green Residential Housing Show. Does the U.S. housing market follow the U.S. stock market? That's what I'm going to discuss in this video. Let's get started. So this is the U.S. House Price Index. Now, what is the U.S. House Price Index? So if we jump over here to the Federal Housing Financial Agency, it talks about what this index is. The FHFA House Price Index is a comprehensive collection of publicly available house price indexes that measure changes in single-family home values based on data that extends back to the mid-1970s from all 50 states and over 400 American cities. The House Price Index incorporates tens of millions of home sales and offers insights about house price fluctuations at the National Census Division, state, metro area, county, zip code, and census tract level. So the U.S. House Price Index is very broad. It's a very big index. There's another point that I'd like to highlight with this index as well. So if we jump down here a little further, it asks, what does this index represent? And it tells us it's a weighted repeat sale index, meaning that it measures the average price change in repeat sales or refinancing on the same properties. This information is obtained by reviewing repeat mortgage transactions on single-family properties whose mortgages have been purchased or securitized by Fannie Mae or Freddie Mac since January 1975. So this index measures repeat mortgage transactions. That's important. It's also an index that measures single-family homes. So there's another index that is also commonly used to measure the housing market, and that one is the Case-Shiller Home Price Index. And if we jump over to spglobal.com, so it's an S&P product, we can see that the S&P CoreLogic Case-Shiller Home Price Indexes, and there's multiple of them. There's one main one that covers everything, but there's other ones that cover select cities. The S&P CoreLogic Case-Shiller Home Price Indexes are calculated monthly using a 3-month moving average. This is important because a moving average can tend to smooth things out. Index levels are published with a 2-month lag and are released at 9 a.m. Eastern Standard Time on the last Tuesday of every month, so it's released monthly. Index performance is based on non-seasonally adjusted data. So if we jump over here to Investopedia, here's a few key takeaways about the Case-Shiller National Home Price Index. The S&P CoreLogic Case-Shiller National Home Price Index measures the changes in the sale prices of single-family homes across the U.S. The index tracks purchases and resale prices of homes that have undergone a minimum of 2 arm-length transactions. So what is 2 arm-length transaction mean? Well, if we click on this, an arm-length transaction refers to a business deal in which buyers and sellers act independently without one party influencing the other. Arm-length transactions assert that both parties act in their own self-interest and are not subject to pressure from the other parties. So now that we know what these two indexes measure, what I'd like to do next is I'd like to compare both these indexes to the Dow Jones and the S&P 500, as both the Dow Jones and S&P 500 are a good representation of the overall stock market. Okay, so on the top here we have the House Price Index. The middle one here in orange is the Dow Jones, and the one at the bottom is the S&P 500. So right off the bat, we can see that these look similar. They all move up at the same time for the most part. Another interesting thing to note is that while there are pullbacks in the Dow Jones here and in the S&P 500 down here, it doesn't register here. So this shows us the strength of the U.S. housing market when compared to the U.S. stock market. While there is certainly correlation amongst them, the U.S. housing market tends to be really good at ignoring what is smaller kind of dips along the way. Over here, we see a similar thing. So this crash right here on the Dow Jones and on the S&P, that was the C19 crash. However, we don't see it in the house price index. And once again, I believe this is a testament to the U.S. housing market being able to filter out the kind of small panic crashes. However, it is still affected by the larger, substantial economic turbulence that does take place in the U.S. economy. So here we see it certainly was affected in 2007, 2008. In fact, what I find interesting is the house price index begins to turn lower before the U.S. stock market does. I think that's an interesting little observation there. It also recovers after the stock market, which is something interesting to take note of as well. What I'd like to do next is compare the Case-Shiller index to the stock market. So I'm going to replace the house price index with the Case-Shiller index. Okay, so here's the Case-Shiller home price index. And as you can see, it looks similar to the other index we were just looking at. What we see here is a similar story where in the run-up to this decline, the stock market, shown in the Dow Jones here, has this dip here before reaching the high point right here, and the S&P also does this dip before reaching that point here as well. However, in the Case-Shiller home price index, there is no such substantial dip. Sure, there are some waves as it moves up to the peak, but once again, we see this even more exaggerated here where it begins to start turning down before the rest of the stock market. It's almost an early warning indicator. Another thing to take note is that the stock market recovers before this index. But once again, here we don't see any drastic crash like we see over here with the C19 crash. It just continues to sail on, ignoring these small little ups and downs that the stock market gets caught up in. But it does acknowledge the more substantial moves. Now, this one is calculated using a 3-month moving average, as we see here. That can have the effect of smoothing things out. So what is going on here? So this is an interesting thing that we should probably keep our eye on. We do see the Case-Shiller home price index reacting to what is going on here. So that could be an early warning, maybe like it was over here. I don't know. It's something that we should be aware of. Let's jump back to the other index, the house price index. Here on the house price index, we don't see such a drastic reaction as with the Case-Shiller index, but we do see some reaction. So that is something to keep an eye on. This one is also moving up, whereas the Case-Shiller is moving up, but not nearly as aggressively as the house price index. Okay, so now I have the house price index on top here in gold. In blue is the Case-Shiller home price index. In orange is the Dow Jones, and in turquoise, or whatever that color is the S&P 500. So to conclude, in this video, we saw how both these two different indexes collect information. The house price index has a wide sampling of data it collects from all over the country, whereas the Case-Shiller index uses a different methodology. But both these indexes are important, and they are widely used because they represent the U.S. housing market as a whole. We can see that the U.S. housing market does indeed follow the stock market. However, there is some key differences. The U.S. housing market tends to be really good at ignoring the small little panics that take place in the stock market, even though those panics can be quite steep and substantial, like we see with the C19 crash. We can also see that the U.S. housing market has this ability to know when something is substantial and has, in the past at least, acted as an early warning before the stock market really caught on of a coming decline. We saw that with this 2008 decline, the great financial crisis, and I'm sure there are many reasons for this, but I'm just pointing out that in this case, when compared to the stock market, we had an early warning indicator with the housing market that something was up. And finally, we have a possible early warning taking place here once again. It's something that we should keep an eye on and see how this continues to develop. It is in these types of crises that opportunities can also exist, so it's not all bad, it's just a different environment we could be moving into. Well, I hope you found this video interesting. If you did, it'd be much appreciated if you hit that thumbs up button. This is not financial advice, but if you did enjoy this type of technical analysis and you'd like to see more of it and you're not a subscriber yet, I recommend hitting that subscribe button. I'll continue to follow these charts as they continue to develop. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.